link between those 5,000 investors that he was talking about to an entity such as CEC that was looking for financing to be able to undertake certain projects. So when we are talking about creating a competitive future, it's both-sided. It's like both sides of a coin. On the one side, we have the investors, which can be you and me, Sitali, anybody here in the audience. It can be an institution. It can be a pension fund. The only thing each person needs to know is how can I play a role? Because if we are going to attain a competitive future, it needs a collaborative effort from everybody and everyone understanding that they have a role to play. And on the flip side, then we have the supply side. And this is where we are seeing the entities that need the financing. So yes, we have the big entities like CEC here, but then there's also the SMEs. And this is where now I want to bring in the work that we have been doing by the development of the Capital Markets Master Plan. So this is a 10-year plan that we have developed, which is anchored on the 8th National Development Plan, because everything that we are doing, we want it to align to the development plans for the nation, for the government. And so our CMMP, the 10-year master plan, is a roadmap on how we are going to develop the market in a 10-year horizon to get it to a point where we can all sit here at celebrating SECAT 40, and we'll have more success stories to bring to you, and even SMEs coming to tell the story of how they've managed to access financing through the market. So in conclusion, how are we doing this? Through the CMMP, it has allowed us to look at various activities that we can do to be able to attain this development. And one of the things is the development of innovating financing options that are available. So we are not just focusing on the traditional, which we are not putting aside. We are still promoting the traditional financing options, but we are now also very active in looking at what other innovative options can we then bring to the table, so that in this energy crisis, through our enabling environment, CEC was able to come and say, look, we can raise a green bond, invest in renewable energies, and then everybody is winning. So that is the role that we are playing.
Okay, thank you so much, Leah. Well said. So you did mention that you are doing something concerning the SMEs. What kind of initiatives do you have in place?
Thank you, Sitali. So in focusing on the SMEs, like I have indicated, one thing that we're looking at is innovative financing solutions. So we've also had a significant focus on alternative finance. Right now, you'll agree with me that the world has really changed. There's a lot now around alternative finance, crowdfunding. There's a lot that's happening in the technology space, fintechs. And as the SEC, we have made it a point to say, we are not going to say, look, we can't do that. As from our market development mandate, we are constantly thinking, how do we evolve, or how do we make sure that the market is ready and accessible also to the SMEs? So one of the things that we have is the regulatory sandbox, where we actually allow for the testing. I want to be critical on that, the testing of fintech innovation. So an entity can have an innovation and they'll come to the market and test it in our sandbox. So we allow them to test it in a live environment. And through that, we have seen initiatives which have allowed SMEs to have access to find financing through these alternative financing options. And so I'm sure the LUCE as well will be able to share with you the alternative finance SME option that they also have that also caters for SMEs. So we are doing everything that we can to make sure that all clusters of projects are actually captured, and then we can address the issues around access to finance. Not to belabor also, but the importance that the institutions also must understand their responsibilities if they're going to want to come to access finance, because there are certain responsibilities that they need to adhere to.
Okay, thank you so much. If you're just joining us, we are discussing leveraging capital markets to attain sustainable economic growth and development. I must mention that in our audience today, we do have state-owned enterprises that are under the IDC that are here with us. And then we also have members of the Zambia Chamber of Commerce, also part of our audience today. So I'm sure the information concerning the sandbox and SME financing solutions that Leah talked about could be very welcomed by the Zaki members. I'll now go back to you, Mainga. So you did mention that you have the mandate of looking after our SOEs. What has been the performance like currently of the SOEs?
Okay, thank you very much. So we have 36 subsidiaries as IDC. At the formation of IDC, the majority of them, if not all of them, were essentially loss-making. And hardly any one of them was giving dividends, was declaring dividends. So essentially as IDC, we have been working with our subsidiaries to turn them around and get them to perform. We are at a stage now where half of them are declaring profits, and we are receiving dividends from around 8 to 10. So so we've been working with them to try to get them to obviously add value to the country. Now, how have we been doing this? One of the things we've done is to improve the governance in each of these subsidiaries. So every single one of them now, I can say, every single one of them has a board, right? Which I think gives them gives the hierarchy, gives a lot of clarity, and the management knows who they are working with and who they are reporting to. It was I would say blurry before, and of course you had government ministries that almost had direct influence and contact with some of these companies. And I mean, we're all working for the development of Zambia, but I think our mandates are slightly different, right? So having a board in place and having professional management in place has done a lot of good for these. We are then also working with them to develop strategic plans so that they have a path on how they're turning themselves around or how they're growing the business and getting to profitability. So I mean, we have spent a lot of time with them, and I would like to say, I would say that we have seen an improvement in the vast majority of them.
Okay, that sounds good. So yeah, like you've mentioned, historically, what we've known is that they've had a lot of challenges. So along the way, what kind of challenges are you facing, and how are you trying to mitigate those challenges as you are working with them and getting them to be ready in terms of corporate governance?
So I mentioned the fact that, you know, being state-owned, I think there were a lot of stakeholders who had a lot of influence on the operations and the performance of the business. And sometimes these stakeholders tended to pull in different directions. So having IDC there as the shareholder and having an alignment of interests, I think helps these businesses and gives them some clarity on where they're going. Also, in putting the boards together, we are obviously looking at, you know, what industry is this company in, what kind of skills are necessary, so that they are able to. So the boards are essentially on professional boards, right? It's without saying too much, they're not political, right? They're professional. So the management is able to tap into these. But I think what is relevant to this meeting also is that an important factor of this is obviously access to capital, access to financing for these turnarounds. We do have some of our subsidiaries which are listed, and we would like to see, obviously, and are working with some of them to get them to that stage. But I think there's a lot of work that needs to be done before we're actually able to get them to the stage where they can list. But the capital markets are an important factor. They are on our minds, and it's a target for us in terms of getting these subsidiaries to that point.
Okay, that's well said and very interesting. You do probably know that the IDC has been identified as a co-implementer of the CMMP, especially where it concerns the development of pipeline companies, so for potential listing. So would you maybe just highlight a few that we think can come to market in terms of your pipeline?
That's a difficult one. I am hesitant to put the spotlight and pressure on some of these businesses. But look, you know, there are businesses that by their very nature require significant levels of capital and long-term capital, you see. So if you talk of the railways, if you talk of Zambia Railways, if you talk of ZESCO, if you talk of Zamtel, you know, infrastructure is you know, companies in the infrastructure space, just to give an example, have typically turned to the capital markets to raise, you know, that long-term patient capital that allows them to invest and grow. So these are businesses that would naturally would be looking to the capital markets, and we would be looking to list as well. I must say that in our strategy of turning around these businesses, we are also looking for partners to work with, right? So in a lot of them, we would like to get, you know, a strategic partner who understands that industry and is able to put a lot more attention and probably bring international standards into that business as it improves its performance. So of course, in bringing in these strategic partners, then obviously listing some portion of the business becomes a very viable option.
Okay, Namunyuka, you've heard of the SOEs that IDC is working with and getting market ready. And Leah also mentioned the initiatives that the Commission is doing in terms of SME financing. So what value proposition is LUCE offering for listing of SOEs as well as SMEs as outlined in the CMMP? And how does that differ from your traditional financing options?
Thank you for that, Sitali. So I'll answer the first part in terms of the value proposition for SOEs. So in terms of the value proposition for SOEs, I think, as he's rightly stated, there is an opportunity to raise long-term patient capital, in his words, on the market. So one of the key things is that once a company that's an SOE is brought onto the market, on the one end, it gives confidence to the Zambian people, it gives structure, it enhances corporate governance. As he rightly put it, there had been some challenges previously in terms of corporate governance management. But then once these things are then brought onto the market, there is a structure that's then adhered to. But also additionally, I think one of the key things is the alleviating of pressure in terms of the fiscus. So what you realize is that once the state-owned companies come onto the LUCE, they're able to raise financing, but in doing so, they are alleviating pressure on the fiscus in terms of the budget. So then they're, instead of being cushioned by the budget, they are adding value towards the budget. And that's the key thing. Now, in doing this, what then is also happening is that a portion is being availed to the Zambian people. Now, the Zambian people are getting empowered. When dividends are declared by these SOEs, the money is going back into the Zambian people's pockets, whether they're retail investors, whether they're institutional investors. I'll give an example of Zafico. When Zafico came through to list, it was pushing towards being Zambian owned. The investors who were supposed to come on should have been Zambians. And this empowered a lot of Zambians in this way. So the value proposition in this regard is to bring SOEs onto the market. It will alleviate pressure on the fiscus on the one end, but it will also empower Zambians, and it will lead to sustainable growth. And one of the key things also in terms of SOEs coming onto the market is just the goodwill then that comes with the fact that these companies have made a turnaround, and they've made that turnaround on the capital markets. And I think the value and the opportunity for SOEs to come on the market needs to be very clear, because then even in terms of the companies that are still in loss-making position, the key here is to expand them. Once they expand, once the corporate structure is all right, once corporate governance is aligned, these companies will expand and they'll be able to empower the Zambian people and generally grow the economy. So that's the key value proposition for SOEs. When we look at it in terms of SMEs, one of the key things I think that is there currently is SMEs do not know where to raise money. They don't know how to raise money. Now, what you need to understand with an SME is that you're a growing company. they are growing business. Debt is not sustainable because it chokes you. You're just trying to grow. And then at the same time, what then is happening is that you need to pay back debt. Now, the capital market offers you equity. So what happens with equity is that you don't need to pay it back, as I previously stated. So an SME that is trying to grow will grow because then they're just trying to grow their business. Their obligation doesn't involve repayment of debt. Their obligation involves growing their business and at the point of profits, declaring a dividend. So that's a very unique value proposition that strongly differs from other modes of traditional financing, because other modes of traditional financing are sustainable. However, they're not, they've got a huge possibility to choke an SME that is trying to grow. So in this regard, the LUCE offers that. But also importantly, in terms of SMEs and the value proposition, there is a lot of goodwill that comes with listing on the market. There's a lot of structure in terms of corporate governance. And importantly, there's a lot of publicity. Your name and your brand is out there in the public. It is known as a regulated brand. It is known as a good brand. And it's a brand then that attracts a lot of goodwill to you as an SME. It also attracts a lot of additional options on the market. So I'll talk back to CEC and how they first came onto the market and they listed. Of course, they're not an SME, but I'll give an example for SMEs. CEC did come onto the market, they listed. After they listed, they came back again and they've issued a green bond. So it shows you how much opportunity and how much value proposition is there on the market, even for an SME. Once they come on, they raise their capital, they expand their business, they get the visibility they need, they still have more products to obtain and to harness within our capital markets. And I think that's the most important value proposition in that regard.
Okay, thank you so much, Namanyuka. And you have mentioned having incentives for SMEs in the market, and the alternative market is there at the LUCE. And in a recent announcement, the Lusaka Securities Exchange and the Women Capital Limited signed a memorandum of understanding to foster collaboration in attracting pipeline of small to medium-sized companies. But then we still do not have any listings on the alternative finance market. What could be the challenges, and what do you think are some of the solutions that would come out of the CMMP?
Okay, thank you for that, Sitali. And rightly put, we did sign an MOU just to foster SME participation in that regard. And just to state that the LUCE has been very intentional in terms of trying to bring on SMEs to the market. And rightly put, one of the initiatives was that particular MOU that then aligns and trains SMEs to become corporate ready. Now, one of the key challenges that we have seen throughout the years in terms of the alternative market is that SMEs are just not ready to come onto the market. They don't have a corporate governance structure, and they also just don't have the ability to come onto the market. They're not investment ready yet. And that's why some of the pipelines and some of the MOUs, like you have mentioned, have been signed, because what we intend to do is to train an SME, train them even before they come onto the LUCE, make them investment ready, so that as they come onto the LUCE, they are ready in terms of corporate governance, and they are ready for a normal investor to look at and say, there is a value proposition here, and I can put my money in such a business. And I think that's something that we're actively looking at. But also, one of the other challenges that has been there in terms of our alternative market, I think is the misconception that when an SME comes to the market, they're giving out their company and they are losing out. I think this is a very strong one, because I think a lot of SME companies are family companies that the family owned. So to come onto the market and give somebody a portion of what you have built has proved to be difficult. But I think what needs to be done in that regard is just to raise more awareness around the fact that, no, you're not coming to give out your whole company. You're giving out a portion. And in terms of a portion, our alternative market rules only want 10% at a minimum, 10% of your company. It means you can remain with 90% controlling shareholder in your company, and you're able to still run it. and expand your business at the same time. And I think I should state that this differs very strongly from what's on our main board, because our main board will need 25% of your shareholding. But our alternative market, because then we understand the ownership that SMEs feel towards their businesses, we have reduced that to only 10%. So I think one of the key things is just to ensure that there's strong awareness in that regard, in terms of the fact that there is a platform for SME raising. The LUCE is not only for the bigger companies, it's also for the SME. And secondly, there needs to be enough awareness on the fact that SMEs are only giving out a portion, and that it's beneficial in terms of them expanding their businesses. So I think going forward, that's one of the key things we're doing. We're having a lot of workshops, we're having a lot of meetings just to push the SME front. We have had meetings with the Ministry of Small and Medium Enterprises. We have had meetings with various stakeholders just to ensure then that we bring on more SMEs, that the information is out there, and also just to kill the misconception in terms of SME listing on the market.
Certainly, sorry.
Yes,
I just
was
wanted
actually coming to you, Leah.
I'm very passionate about SMEs, and very commendable what my colleague has just mentioned. But it's also the demystifying, the misconception around I'm going to lose my business. Because another way to look at it is, look, you're holding on to, it's like the small pizza at Panarottis, when you could actually be an owner of a large or an extra large pizza, but because you've come and you've raised financing, which then enables you to grow your business to another level. So I think it's commendable, that awareness, so that we can just demystify the misconception around SMEs coming to this.
Well said. Actually, I was going to come back to you as SEC to say what strategies do you have in place in terms of awareness, speaking to Namnyuka's point on demystifying the ownership issues and whatnot. An SME doesn't want to let go. So how are we doing that?
Thank you. So I jumped the gun. So, from our side, and everything now that we're doing is really embedded in the Capital Markets Master Plan, the CMMP, and there's 5 different development areas. And so SMEs are catered for there. But then to answer the question that you ask around what are we doing around awareness. So from our market development mandate, there's a lot that we do in terms of awareness, and the team has actually clustered our target groups in different clusters. So we have the children, we have the youth, we have the institutions, also clustered according to their size, etc. But what is also key, and one thing I'm going to call on or propel out there, especially now that we're at the show, is for our implementation of the Capital Markets Master Plan. The SEC is not doing it alone. I heard you mention the IDC, LUCE is a partner, and various institutions, but we also have what we are calling action teams. And one of the development areas in the CMMP is actually linked to capacity building. And the capacity building is not just for the market, it's not just for the regulator, but it's for different clusters and actors that are in the market. And so SMEs will be one of them. But what it will allow you to be part of the action team is that you come on board, and then you're able to share either your challenges, the ideas that you have, which can then be onboarded, because the action teams are actually open even to members of the public that would want to join and participate. And so we want to see a lot of representations also from SMEs to be part of those action teams, so that they're actually driving this agenda. But from our side and from the CMMP side, there is dedicated activities that will be done around awareness, and not just awareness, because awareness just ends at letting you know there is this and there is that, but there's also capacity building that we are going to be doing. And so the SMEs are also a target that we are going to be looking at.
Thank you so much, Leah, for that. I'll now go back to CEC. Namnyuka did mention that CEC came to market normally, then they came back with to issue a green bond. So I do understand the bond is for sustainable projects, could you give us more insights on your journey towards issuing that bond? What challenges did CEC face along the way?
No, thank you. So maybe let's start with linking what we are doing to the theme, and then we'll talk about.
Can we hear him? I think something has.
Hello? Okay. Okay, can you? Okay, now that's fine. Okay, sure. So I was going to say that linking the theme to what we've done, I can probably look at it from different perspectives. The first one is that we can, as a business, create the value that we need and in a sustainable way by ensuring that we are more competitive by accessing cheap long-term financing. The second aspect is that from an equity perspective, we are then delivering the value that is required to our shareholders. And probably the more important aspect in the industry now is more around our contribution from a sustainability perspective to the ecosystem and the sort of carbon emissions that we are offsetting. Now, if you look at it from that perspective, you see that from a business perspective, then we are sort of aligned to the theme that we have. And when we came to market, I guess the biggest considerations that we had was whether we should just go to one institution and get the financing required. And that's what institutions wanted. Most of the institutions, the big institutions, just want to sign a loan agreement and you get that. But as a business, we thought that we needed more Zambians to benefit in the upside of the business. And we believe that the opportunities in the sector are immense. I think you've all noticed that there's even a liberalization, there are new reforms coming up, anyone can set up a business. And we think that that opportunity, we need more Zambians to come in and play a role. And in this instance, I'm looking at a role of an investor. When we came to market again, we thought that the best thing to do is to try and get financing that best links to the PPAs that we sign, which is the currency of the earnings, which is a dollar instrument. And again, when we did our research, we realized that there are some financial institutions, banks primarily, that take high net worth individuals' funds in Zambia. And most of that money ends up in Europe and the US. And what they are doing is essentially buying similar type instruments for them because they've got foreign denominated expenses. And from that perspective, we thought, why can't we then have it in country, using in-country resources, in-country cash flows? And look, from a government perspective, we believe that this also helps to put pressure on the foreign currency. Because if you have a lot more individuals in Zambia earning foreign currency, then the pressure helps, especially if there are a lot more institutions that come to market with similar type products. However, I'll start with the negatives that we found. The negatives that we went through probably start with the perception of most of the investors. The first thing is that renewable as a theme is not yet been embedded in the various investment mandates, whether it's for pension schemes or banks. And therefore, it becomes very difficult for you to pitch that I'm bringing a sustainable product. I think what everyone who is investing is looking for, they're just looking at a return and not taking the impact on the global economy. So one of the things that we think we need to push for from a capacity building perspective is just to see how the country has signed on to various protocols and is a member of various MOUs which link or obligates the country to contribute sustainable way of doing business. And we think that we need to cascade that down to businesses and regulation from a reforms perspective. That was one issue. The second issue is that we also need to ensure that investors go beyond looking at traditional structures as they do their risk assessment for these investments. I think we are so used to the very traditional way of financing. The products that we brought to market were project finance, and everyone wants a corporate finance, and we just need some form of education. Now, I realize that not everyone should understand that, but we need the experts, the financial experts, to understand that, especially the banks. Now, at a very basic level, I think when we are going through these motions, I'll steal someone's analogy who is in the audience, where we say, when you go to a bank and you've got houses, and you're telling the bank that, look, I've got these houses, can you please give me a facility, give me a loan, and you can look at the rental income that I earn. The first thing that the bank will ask you is bring your payslip. Now, can we change that mindset? Because why do you want a payslip when the person has shown you where the income is coming from? Can you look at the income streams and do your risk assessment on those assets, and then finance on the basis of the income streams that are provided? And I think it's a similar thing, and we need to educate each other and make sure that we get over that. But the other few issues are more technical, right? This is an area which is developing, and if it's an area which is developing, you need to have a bond that is sort of certified. The people who certify, the people who do the analysis, we don't quite have anyone in Zambia who can do that. But these are not very complex things. We know that there are a lot of institutions that can work on a path and ensure that they start certifying others, whether as an SPO, even if it's an audit firms. We've got the big audit firms in Zambia, KPMG, Pricewaterhouse, Ernst & Young, but we don't have the capacity in-house and in-country to undertake what we call the green bond framework audits. So our push now is, can we please push to have most of these services locally? Because then you start reducing your costs of providing these services. And ultimately, for us as a borrower, we start reducing the cost of borrowing. However, that is more on the downside. There are positives. The regulator, we realized that the regulator and the policymakers, they were quite eager to see a solution. And they were extremely proactive. So anyone who we brought in, whether as an advisor from outside, they believed that we've got the right policymakers, but the right regulators. The regulator has been capacitated way ahead of the market, which is a positive. But we need to move a step further, where we start capacitating the investors and the market as a whole. The other positive that we noted was that the framework itself is there. So you've got Lucy have got the framework from a SEC perspective. Everything exists. Yes, it requires a bit of tweaking here and there as you walk through the process. But overall, we think that we have a very good base. And it's on that basis that from a business perspective, I want to announce that we're coming back to market again. We're hoping that within the course of the year, before we close the year, we should come back to get a second tranche on the same MT, the medium term bond that we have. We'll be looking to accessing anything up to $100 million for this year. But we also have I must say, an aggressive pipeline of investments that we are looking to. Look, we as a country, we have these power deficits, and we believe that we can play a role on our own to try and alleviate the position or the situation that the country finds itself in. So in that regard, there is a 136 megawatt solar plant that is under development. We hope that we should raise the money within Q3 through the market. We are also looking to develop 2 projects of 20 megawatts each with a partner, all of them within the course of this year. And we've also started doing 1 project in the Chingola area with one of the mining groups. So at the moment, we've got a pipeline for projects for this year, and we'll come and talk about projects for next year, which will also be in different technologies, but all in a sustainable energy way.
Oh, that's, can you get me? Okay, interesting to know. I was actually going to ask if we have any more projects from CEC coming to market. So it's quite interesting to note that you do have plans of coming back to the capital markets. And I'm pretty sure that's exciting news for everybody here. Just when we are having a good time and learning so much, we are almost at the end of our... Okay, the mics are lit. I think we are not yet there, but we are getting there. We're getting there. Okay, so I'll allow our audience to also participate so that we are just not alone here discussing this. It's a very interesting topic. So if we have any questions from our audience.
I'm not sure I should be asking questions. Yeah, I think a very, very good lively panel. I'm surprised we've run out of time. But my question goes to IDC. Listening in to the private sector of the exciting stuff that CEC is doing, do we have anybody in your group, anybody, I mean, any entity that could actually emulate what private sector is doing? Raise money, I think Namunyuka nicely put it, off the balance sheet of government to do the exact project that that CEC is doing. I happened to visit the CEC 60 megawatt project because I wanted to see where the money went. You know, sometimes the papers could lie, right? So when I saw green energy being injected into the grid, I was like, okay, wow, this is like, do we have like, let me be specific. We have a ZESCO. Why can't a ZESCO do exactly the same thing as what CEC is doing? CEC have come up with SPV, the CEC renewables. That's the one that raised or is trying to raise the 200 million. Why can't we have a ZESCO renewables raising funds in a project finance manner? Forget about the ZESCO balance sheet. We know it may not be the best to go to market with, but with good governance and everything is structured properly, why can't a ZESCO raise money and do a power plant? I would like CC to probably maybe lend something to ZESCO. How long did it take your project to actually get to producing power? So I think that question is to IDC. Mainga, sorry, I have to put you on the spot.
I hope this is working. Yeah. So before we started, as we're standing outside, I actually told Philip, I said, please no hard questions.
And then they gave you hard ones.
But I think he already had something lined up for me. Right. So first, so is there ZESCO renewables? Yes, there is. But I think it's important to mention here that IDC's reach is quite long, right? So let's not forget that ZSMIH is one of our subsidiary companies, and ZSMIH is an investor, is a shareholder in CEC. So we actually have, you know, it might not be directly, but there's a lot of things that are happening where IDC is involved. It just not might be direct. But let's put that aside. very, very interesting because yes, we do have one. So IDC has an SPV called Zambia Power Corporation. And Zambia Power Corporation, so ZPC for short, ZPC has actually done things in the renewable space. I will be the first to confess here that to the capital markets, but for those who know this, there are 2 power plants in the Lusaka South MFES, in the multi-facility economic zone, right? There's those are, so ZPC is a shareholder in those. We own 20% of each of those solar plants, and those are selling into the grid. And obviously, in response to the current crisis that the country is experiencing, in a sense, ZPC is in overdrive right now. So there are a lot of projects that we are looking at, a lot of other projects we're looking at to develop in response to this crisis. And I would say here that the capital market is an option that we're looking at for some of that financing.
Okay, interesting to know. That's very interesting to know. Any other questions from the audience? Yes, there's in the back.
Good morning, everyone. So my question is going to, I think, over everyone in front. I don't know who's going to answer.
Sorry, could you just introduce yourself?
Oh, my name is Annie Zimba from UNILAS, Deputy Minister of Finance under the Union. So my question is that how are industries such as LUCE, because we've talked about the power deficiencies that we're having, but we haven't talked about the factor of climate change. So how are companies such as LUCE looking at improving or phasing out the situations that we're having, such as climate change? Because we need to see these improvements happening.
Can I go? Okay, I just want to chip in also because we are very passionate about sustainability. Before Luce will come and just answer that question. So one of the things also that we have been working towards has been to, so we coined a vision, you know, sometime in 2018, if memory serves me right, and that was to position Zambia to be a global green investment hub. And when we coined this vision, we started asking ourselves, so what are we going to do to be able to attain this vision? And what we did is we began to work towards, first and foremost, ensuring that we capacitated ourselves, and as you heard from Steve, and then also we started saying we need to have the right products on the market that will enable the raising of green and sustainable finance. And this is finance that then is tailored to projects that are green and sustainable. And this was 2018. So we came into 2019 and we had the green bond guidelines gazetted. And at that time, people literally said, what are you doing? Why this fancy products? But we said, look, climate change is already happening and we don't have the luxury to excuse ourselves and say the market is small, we are not ready. We have to onboard these innovative and these different financing options that will help us to alleviate the detriments of climate change and enable us to mitigate and adapt to the effects of climate change. In 2020, COVID hit, and that allowed the commission, I think for the commission, that was our busiest year. You know, we moved into working from home, but then there's a lot that we then coined in terms of contributions to the vision. So a lot of awareness, you know, now we had one-on-one engagements with the entities to try and share with them the vision around why we were saying we wanted to position Zambia as a global green investment hub. We are blessed with the natural capital, and we wanted to make sure that we are utilizing it to our advantage. And that is how we came up with the green bond guidelines. But one of the things that I wanted to bring to the fore before I hand over to Luce is we've not ended there. Right now, yes, we are talking about the financing bit, and we're very excited with our inaugural bond because then that is the success that we are looking for. That validates the work that we have been doing and saying it's possible. And we want to see more companies doing that. But now there are other things that we are doing, other angles that we are trying to address, because the detriments of climate change are quite, we can all experience them. And now it's an easier conversation to have, because my grandmother, who is in the village with the drought, now knows what climate change is. The energy deficit literally affecting our country has got more of SMEs. So everybody has been affected, and now everybody has woken up and what can we do? So one of the things also that we're doing from a sustainability perspective is around sustainability reporting. That is something now that is coming on board, because now we now want the entities to not just focus when they're doing their financial reporting, oh, we made this and these were our expenses, etc. We want to start looking at how are they interpreting the risk, the climate risk that we are seeing. We're talking about nature and biodiversity. And so there's a lot that we're doing in that space, trying also to capacitate. It did mention the need for us to be able to develop experts, local experts, so that's something that we're doing. So there's a lot of work, and I'll urge you to come to the Green Pavilion to our stand and we can have a whole conversation, Deputy Minister. But at this point, I will hand it over to Luce just to also share what they are doing in the sustainability space.
Namnuka, I'll give you just 2 minutes, or maybe a minute, actually, in under a minute.
Okay, no, a minute is fine. I think Leah has well captured the initiatives that are there under the capital markets in terms of the green space. But additionally, I think just to state from the Luce's perspective, we have constantly held what are called corporate governance awards. And as part of these awards, we have awarded companies in the sustainability space, companies that have taken the step to report sustainability in their financial statements. So that's one of the steps that we have undertaken, and we have this annually. But also, importantly, we are also just having a review of our corporate governance code as we undertake a revision of all our rules. Importantly, we need this aspect of sustainability to very clearly come out in terms of our corporate governance code. So that's one of the things that we're doing, of course, in addition to being aligned with what the Commission has stated.
Thank you so much, Namunyuka. Do we have any other questions? Okay. In under a minute, we have 3 questions.
Morning, everyone. My name is Christabel Maplanga from the University of Lusaka. I am the Vice Chair for the Economics and Business Association. So I have a question to everyone in front. So which milestones or KPIs or indicators will signal the leveraging of the capital markets? Which KPIs can we see, as in what is going to show us that, okay, this is what's really happening, we've leveraged the capital markets, and yeah, thank you.
Good morning, everyone. My name's Levi Zulu, and I'm the Publicity Secretary. So my question goes to everyone in front. In what ways can public and private partnership contribute into leveraging capital markets for sustainable economic growth? And what are the potential challenges in implementing such a partnership? Thank you.
Hello, everyone. I'm the chair for the respective association that they've mentioned. So my question is, what are the present incentives that have been set to capitalize the leveraging of the capital market, and are there more that are going to be set?
Okay, I can go first, and I'll try to be as quick as possible. Oh, there's one more, okay.
Thank you. Mine is simple. Mizahara from Zesklai. So we've spoken to the various initiatives to sensitize the supply side of capital, basically the advantages of this thing. And we spoke of the fears. Some of the SMEs, they think once they list, people will come on and take over their company. So mine is twofold. So what is SEC doing to sensitize the demand side as well? CC spoke to there's capital in country, but you find the banks are externalizing that capital. So do we have enough sensitization on the retail side as well on the benefits of the capital markets? And also how do we protect, I'm with the parastatal, for example. So when I say I'm listing, obviously people think some sophisticated investor from somewhere will come in and take over the national assets. So just some thoughts on that. Thank you.
Okay. And then Luce, you can also speak to the incentives as well. Then the PP for the last two, IDC and CEC.
And what was the first question again?
The key aspirations and milestones.
Okay, all right,
that
yeah,
one as well.
yes, thank you. And I think some excellent questions there. So just to quickly, so when you look at our capital markets master plan, and I hope there's a copy to give to that powerful union there, we do have we have highlighted some key indicators. And I think that's very important because when we are talking about everything, you want to also have these key performance indicators where you're able to measure your success or whether or not you are attaining the objectives that you've highlighted. So we have a number of them in the CMMP. I won't go to list each and every one of them, I think on account of time, but I will indicate that they've been classified into short, medium, and long term. And so this is a horizon looking at 2022 to 2031. And so there are different indicators that we have put, which will be our key milestones there. And I'll just give an example because CC is here. So one of them was for us to actually see a green bond issuance. So that was one of the KPIs. So, but the CMMP then does have, we've got like number of how many listed entities we want to see, growth in terms of the investors, growth in our capital market, our market capitalization, etc. So the CMMP does have the KPIs as our success indicators. Coming to the question on the waivers, I'll speak to the waivers that we currently have on the green bond. And one of the reasons also was to make the green bonds attractive and also it being not really a new instrument, but sort of different in the class of the debt instruments because then it has this greenness that then is attached to it. But one of the things is that we did get a waiver on the withholding tax for the investors that invest in the green bond. So they don't get to be taxed. They don't get to pay the withholding tax. So that's an upside also, and hopefully it's also addressing the question on what we are doing on the demand side. That's a win for the investors that get to invest in the green bond. On the demand side as well, the SEC did waive off 50% of the registration fees. So for a green bond registration, you get to have a discount on the registration fees from the SEC side. Then the last question I'm tackling, I think, is what the SEC is doing around, yes. So there is a lot of awareness that we are doing to encourage investors to come to the market. We actually have an awareness campaign that is being birthed by the market development team that is going to go full throttle, just focused on the investors. But one of the things also that is critical as we do this is also the understanding around what we've done in transitioning our regulatory so we've moved from compliance-based to risk-based supervision to enhance the regulatory environment so that we are also working towards addressing the concerns of the investors. Because when the investors are coming in, there are certain things that they're looking at as they're measuring the attractiveness of where their funds should go. So we at least have done that bit in terms of trying to enhance the regulatory environment and then now moving towards propelling more awareness so that we can have more investors coming to the market.
Okay, thank you for that. I think I'll just touch a little bit on the incentives bit in addition to what Leah did mention. In terms of incentives for SMEs on the LUCE, we do not charge for the alternative market. So we placed a waiver for the first 10 SMEs that come onto the market and list, and they are not charged a listing fee in this regard. Additionally, I think I'm also just going to speak to the incentive in terms of companies that come to the LUCE in their first year of listing. That's normal companies, not SMEs. So these are then exempt from income tax for the first year of their listing. And that's one of the benefits that's been there. But importantly, I think what we're trying to do is enhance these incentives. We're speaking to key stakeholders, we're speaking to the Ministry of Finance, and we have made representations to enhance these incentives so that even in terms of the incentive that avails a 1-year exemption on corporate income tax, this could then be extended further. And this is something then that we're trying to push in terms of incentives.
Okay, thank you. IDC and CEC, the PP, address the PP question in under a minute.
Okay. Yeah, it's as IDC, we are. I wouldn't call us public or government per se, but in terms of the the public-private partnerships, we develop projects, and even with our portfolio existing companies, we are always looking for partners. For a lot of them, we're looking for partners because we have realized that for a lot of the companies in our portfolio, a partner that understands the industry, has generally tended to benefit the business, and those tend to be some of our better performing businesses. So we are looking to partner with the private sector. I can say now, like in our pipeline, we are doing quite a bit in terms of agribusiness. There are a number of, adding value to some of the products of some of the areas around Zambia. For example, we're setting up some fruit processing plants. We're setting up one in Winilunga. We have one coming up in Katete, and then we have one in Chisamba that's going to be processing tomatoes and adding value to that. And in these, we are obviously looking for partners because, in a PPP or with a private partner, the one thing that you always get is sustainability, right? And sustainability and profit for the private sector is key. And as a country, then we also benefit.
I think since we are almost at the end of our panel discussion, as you address that question, I'd also like you to make your concluding remarks. CEC, Mr. Mkup.
Oh, thank you. So from a CEC perspective, how do we see PPP projects? CEC itself is a PPP project because we've got IDC through ZCCM as an investor. We are looking at a number of projects, some of which I can't mention here because they're preliminary, but we are partnering with government to try and see how we can play a role. But also, I think it brings about the right alignment in that the government have got an obligation for public goods delivery to the people. From our perspective, it's efficient operations of the asset itself. And of course, there's a profit aspect, which allows the capital to go in. So we believe that with the new framework that is there, you will see as a country a lot more PPP type structures coming up from especially the energy sector. I can probably extend this further in that we believe that in a smaller way, some of the initiatives that are coming through where an individual can sell their own the power on the rooftop into the grid, some aspect is a form of PPP. So we think that this topic is broad and it just depends on how you want to cut it. But we think that the framework now allows for a lot more of these sorts of things. Finally, I guess I'll be selfish from in concluding and just say that from an investor's perspective, please look out for the upcoming CEC bond. We already have a CEC bond that is trading. The minimum that you can invest is, unfortunately, it's $1,000. It's dollar pegged. It will give you a yield of 9%. There's another tranche coming through. Please look out for those investments and be a part of the growth. And this is in addition to the equity story that we have. By the way, and finally, CEC is now officially, maybe the Lusa can confirm, is now the largest Zambian company listed on the Lusaka Securities Exchange. So be a part of it. Thank you.
Well done, well done. Mr. Mukando, Mainga, as you conclude, let me throw in a wild question for you. So if IDC could implement one bold, transformative initiative to accelerate the listing of SOEs, what would it be? As you conclude.
So I don't know why I get all the hard questions, huh?
Yes, oh yes. I think I took a leave from CEO to put you on the spot and get you the hard questions.
If IDC could implement one bold
move to accelerate the listing of SOEs, what would it be?
I would say governance.
Okay.
And governance, I think I think governance is underestimated on its impact on the performance of businesses, right? And with the state-owned enterprises, I've talked about how, you know, in previous times, right, where the lines were blurred and you have parties pulling in different directions, right? And now I think with the IDC as oversight, then obviously that's a lot clearer. The fact that now a lot of these businesses have you know, corporate governance has been sorted out. There's boards, there's professional boards there who are dedicated to the improvement of the business. I think that takes them a long way in being able to bring them to the market. And in a sense, a large part of what happens on the market is also confidence, right? And having that corporate governance sorted out, I think should give confidence to investors. So I would say corporate governance, and it is something that, in a sense, steps have already been taken. A large part of it has been done, but obviously there's a lot more to be done in terms of just giving that confidence and obviously demonstrating a track record of time of implementing this. But just as a final remark, just to say thank you very much. I think this was really good. The capital markets are an important avenue for IDC, and it is top of our minds as we work with our state-owned enterprises to turn them around, to improve their performance. Capital raising is a major part of that.
Thank you so much, Mainga. Okay, so I'll try to balance so that I'm not just unfair to you alone. I'll also throw Namnuka, a wild one. As you conclude, Namnuka, if the LUSE were to introduce a new product or service to revolutionize the capital market landscape in Zambia, in line with the CMMP, of course, what would it be and why? As you conclude.
Okay, I see how he feels, yeah, with the hard questions. Okay, so I think if we were to launch a new product, first of all, I'll start by stating that as it stands, the new products that have come in terms of the green bond, the REIT, these are they're very good for our market. They're revolutionary in themselves. However, then if we're going to add an additional one, I'll look at the ETF. I know that the SEC has done the ETF guidelines, and I know that if we do bring on ETFs to our market, a gold ETF, for instance, and you're able to track the performance of gold through the capital markets, through an ETF, that would revolutionize our landscape. And also, very importantly, I know we have had a number of challenges with illegal mining, things like that. So then if you're able to do this from the market, it becomes a lot easier in form of an ETF and in form of leveraging on the guidelines that the Commission has recently enacted.
Perfect. Okay. So there's a challenge to the brokers in the house, ETFs, right? Okay, so in conclusion, the Commission, give us your concluding remarks in line with what we've discussed today and just a call to action. What would you like to see?
Thank you, Sitali. I think to conclude, and I like that. So our call to action is for us, we have demonstrated and we are still demonstrating the role that capital markets are playing in revolutionizing the economy and in creating a competitive future. Namunyuka earlier talked about the government fiscus, and we are all aware about the state of the government when we talk about the government debt, etc. And so what we want to see now is more from the private sector to do more in terms of driving economic development. And as a capital markets, we are here, we are ready. And all we are waiting for is for you to come, and then we will be able to provide to you the much needed access to finance. And if it's tailored differently, we are open to having the conversation because innovative products are critical from us. And last but not least, I just want to say we need to create a hashtag, watch the capital market space, because there's a lot that is happening in the capital markets, and there's a lot that we're going to be doing to drive the economic development agenda. And so in this next 10 years, you just have to be on board. So hashtag watch